Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Alaska Air stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a mid-cap company, $4.5 billion market cap. They're trading at $35 a share, and they have 127 million shares outstanding. Alaska Air operates through three segments: mainline, regional, and horizon. The company offers scheduled air transportation services pretty much exclusively using Boeing aircraft for passengers and cargo in the US, also in parts of Canada, Mexico, Costa Rica, Belize, Guatemala, and the Bahamas. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They did have positive $700 million of free cash flow in 21, but as revenue grew, their free cash flow became negative. Its low point was negative $444 million in 2023. Net income is a profit or loss on the income statements, revenue minus expenses. That looks okay. That's positive each year. It did go down a lot from 21 to 22, but up over 400% in 23, down again in trailing 12 months. Really slim margins. In the past 2.5 years, between 1 and 3%. Revenue is a sales for the company, and that goes up each year from $6 billion to $10.5 billion. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's $5 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $4 billion. We divide that by 127 million shares, and we get a calculated stock price of $31. They're trading at $35, so they're trading at a 13% premium. It's a sell according to the model. Do you think it's a buy or sell? Let me know in the comments. What a surprise. Simply Wall Street has them undervalued. Their valuation is $40. 12 analysts priced this stock at $65. They also say it's undervalued. There are 16 companies in the same industry as Alaska, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend $1.5 billion in CapEx, a little more than the average. They have one of the better debt-to-equity ratios. For every dollar of equity, 90 cents of debt. They don't pay a dividend. Only 3 companies pay a dividend in this industry. Allegiant pays the highest, 5.8%. Their free cash flow is pretty close to the average. They rank 5th in market cap, $4.5 billion. Price to book is equal to the median, 1.1. They have one of the better PEs. They actually have a PE. Most companies are NAs. We can't look at that price to free cash flow, negative free cash flow. Price to sales is between the median and average. They generate $10.5 billion of revenue, 5th highest on this list, and their 5-year annual revenue growth rate is 5%, which is higher than the median average. Here's their latest income statement, the second quarter of 24 compared to the second quarter of 23. It's pretty much flat. $2.8 billion to $2.9 billion. Passenger revenue is up a little bit. Actually, all their revenue segments are up slightly. Cargo, $72 million. Other, $174 million. Payroll is their biggest expense, $780 million. Then fuel, $600 million. So expenses are pretty much flat from last year. Operating income down slightly from last year, $322 million compared to $337 million. They spent $36 million of interest on their debt. Pre-tax income, $316 million, $100 million of taxes, so their net income, $220 million. EPS of $1.74. They are buying back stock. Their shares outstanding are down a little bit from 127 million to 126 million. So to summarize, I have them trading on a 13% premium. Their ranking is 3 out of 10. Would I buy them? 1 out of 10. Ratios are decent. Their PE is a little worse than the median. We can't look at that price to free cash flow. Price to book is equal to the median. Price to sales a little worse than the median. Financials 4 out of 10. Their revenue is up 70% since 2021, but they continuously have negative free cash flow. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking the link in the description below. Thanks for watching.